What are some of the unique provisions of a reverse mortgage? A reverse mortgage is a non-recourse loan, meaning the borrowers have no personal liability for the loan. Since the home itself is the collateral used to satisfy the debt, neither the borrowers, their heirs, or the estate can ever be responsible for any mortgage balance that might become due. A reverse mortgage always results in improved cash flow, and cash flow is one of the primary challenges in retirement. With sufficient equity, senior homeowners have the flexibility in how they receive the loan proceeds. For instance, they can receive a lump sum cash payment at closing, leave the available funds in a line of credit for future access, or opt for a term payment for a specified number of months at a targeted monthly payment amount for the purposes such as delaying Social Security, another awesome use of a reverse mortgage. Another alternative is a 10-year or permanent monthly payment to the homeowner every month for as long as they live in the home and meet other provisions of the loan. That works well when a borrower's primary benefit of the reverse mortgage is to supplement monthly income, and you want a check in the mail every month to show up as long as you live in the home. Pretty cool. Leaving funds in a line of credit is a powerful way to secure your future and provide confidence and flexibility in your retirement plan. The available balance grows at the note rate plus 0.5%, and the result is a significantly higher credit line in the future when you need it most. Let's talk through what a reverse mortgage can do for your retirement.